Hello, thank you for tuning in to our podcast Tech Talk by GSDC, where we bring to you exceptional conversations by expert professionals. My name is Philipp, and in this episode, we will be listening to Veronika Ferstl and Philipp Sandor on the topic of blockchain in the financial market.
Good morning from Munich. My name is Philipp. With me is my colleague Veronika. We are both working at the Tengni GmbH, headquartered here in Munich. The Tengni GmbH is one of the few regulated crypto custodians here in Germany, under supervisory of the BaFin, the German financial German financial regulator here. Happy to basically record a podcast for you today at GSDC. We'd like to walk you through the innovatory parts of the blockchain technology itself and where crypto custody and crypto custodians play a really important role under the perspective of regulatory frameworks. Quickly to myself, my name is Philipp Sandor. I'm being responsible for sales and business development here at Tengni. Prior to that, I used to work in wealth management, asset management, and started my first basically experience within the blockchain technology back in 2016. Really happy to be here today. But Veronika, why don't you go ahead and introduce yourself quickly?
Yeah, hi, my name is Veronika and I'm the product manager at Tengni. I studied business administration, and before I was at Tengni, I worked for a fintech bank and helped to build up the fintech bank. And I was before I was also in real estate business and as an asset manager, and I fell into the rabbit hole of blockchain and crypto 2017, and since then I dive deeper and deeper.
So let's go ahead. We have a big list of questions. Why don't we just start?
Yes, we start first of all with the most important question: what is blockchain technology in essence? Maybe Philipp, you can answer this question shortly.
Sure. So in a nutshell, the blockchain technology is a digital ledger technology which is distributed all around the world. It stands for their transaction records, which are recorded in a secure, immutable, and decentralized way. These three keywords are essential to basically describe the blockchain technology in one sentence. Imagine it as a registry, as a cash book, or a accounting book without a single entity, basically having the control over it. It is spread apart all the decentralized nodes, which are basically operating this decentralized ledger.
Yeah, that's very well explained. And so you see it's a more progressive technology for financial institutions, right? So then we can come to the second question. How can blockchain manage high speed and high volume trading in the financial markets? Is there an advantage, and how would this look like?
Maybe I can take this on multiple points of perspectives here. So if we look at the classical transaction management of cash flows or cash management and cash transactions all over the world, in our traditional financial systems, we obviously see multiple intermediaries basically being involved in a single transaction going from A to B, let's say New York to Singapore. There might be up to 30 different banks involved in such a transaction over the traditional SWIFT system. And this is where blockchain technology obviously comes into place and could manage high speed or high volume financial transactions with the technology in such an ease that not only transaction times are almost basically cut down by 99%, but also transaction fees. Obviously, in traditional markets, those intermediaries charge their fee for basically pursuing the transaction. In the world of blockchain technology, depending on which kind of protocol you're transacting, those kind of fees are down to 99.9% of the fees compared to the traditional market. Do you have any other points?
Wow, that's huge. Maybe you can dive more deeper into one of these protocols. For example, Ethereum. which executes smart contracts. Can you say something to smart contracts and how do they work, or how can they evolve the transactions?
So maybe first look into Bitcoin, the first blockchain out there, coming up in 2009. Bitcoin was seen as a transaction layer, so where people could basically easily send one Bitcoin or amount of Bitcoin to another recipient all around the world, as I said, in almost instant time with really low fees. Ethereum being the largest blockchain or protocol as of now, coming up with their smart contract technology, meaning that you can really develop applications on top of the blockchain, is not only seen as a transaction layer, right? So you can build multiple kind of ideas, products, and applications on top of this network, which then again, being the Ethereum blockchain, is dealt with or is taken as the immutable transaction layer where all of the transactions are recorded on top of it. But as I said, those smart contracts can be executed for different kind of applications as well.
Yeah, interesting. Then let's go to the next question. Maybe to make it more realistic and understandable for the audience, can you name one of the use cases where cryptocurrency in financial markets fit into the strategic plans of organizations?
Sure. The first thing coming into my mind, let's take a big corporate operating here in Germany, maybe an automotive manufacturing company, having multiple suppliers all around the world, where they basically get all of their supplied parts for their car manufacturing. And let's say you got to pay your supplier in China or India, wherever they are based. You're usually relied on first FX courses, so you need to change your euro into the corresponding currency. Then again, go ahead, initiate this transaction over the traditional financial system, meaning multiple intermediaries again being involved, a lot of transaction fees taking place. This is a best practice use case where blockchain technology and specifically maybe stable coins. So to quickly summarize or come up with an explanation what a stablecoin is. A stablecoin is a pegged token or a token which is pegged to a single value of a corresponding unit. Let's assume there's a USDC stablecoin. As the name suggests, the underlying of that stablecoin is the US dollar. The promise of this token is that each existing token out there on the protocol, on the blockchain, is basically existing in a physical form of US dollar, being a government bond or cash reserve. This is something coming to the project itself. But let's take this USDC, for example. The manufacturer would like to pay their suppliers somewhere around the globe, and basically would like to save a lot of transaction time and fees. This is where a stablecoin transaction could come into place.
So in essence, this is very good for companies to save costs, reducing intermediaries and make transactions and businesses faster. Am I right?
Absolutely.
Very
Absolutely.
cool.
It's definitely still in the early beginnings, since those organizations and big corporations, they don't really have the knowledge yet how to deal with these kind of transactions, and specifically first experiences in the blockchain technology field are not there yet. But this is why kind of companies like us, and I'm sure we're going to touch upon that later, are basically settling the basis for these kind of first ideas and first experiences of these institutions, such that we basically have a regulatory framework. We come up with the basis being a wallet infrastructure, such that these kind of companies can deal with these new digital assets and then start operating, practicing, and then maybe going live with their ideas and really utilizing the potential of the blockchain technology.
That's maybe good to mention that Tangany is not only a custodian, so the tech provider for many banks and financial players, but also regulated financial institutes. So we know how financial industry work and what they need, and that's quite good to give a good instruction and advisory as well. So I can imagine if you're talking with customers or potential new clients, that you have to educate them as well a lot.
Sure. Where you see basically the benefits or challenges within the blockchain technology, specifically for financial markets or intermediaries, and where you see basically the necessity or what really is needed for those financial intermediaries or corporations to get involved within the technology, and what it takes to basically give them a good feeling that they can start experiencing the technology and really using it.
Yeah, so let's start with the benefits. As we already said, it's reducing intermediaries. So you can save costs, but also you can save time. The transaction speed is a lot higher, and you have self-executing contracts, for example. And this is a huge automation process, as you can say, and that's one of the main benefits. Next to this, next to the fact that it's also transparent, so you can always trace the trades and can look into the blockchain, and that's pretty cool. So, but one thing is, of course, you have also more responsibility about your assets and what you're doing, and that comes also with a new kind of regulation. Regulation has to be adjusted, and that was made in Germany very well, in my mind. We had we have the crypto custody license we talked already about, and now we have also the crypto security license, which is a more or higher standard for security when it comes to tokenization. So in the beginning, you remember the ICOs was a very low level of security for investors, and then there were the STOs, where is a higher level of security, and now we have in Germany the Electronic Act, which gives a much higher level of security for the investors, but also for the issuers, and that's pretty cool. And so I see Germany here as a role model for other countries. But as you may know, the interoperability is one of the challenges we also have to tackle, and the harmonization. So it's good that Germany has such acts and laws, but it needs to be also globally, because blockchain is global. You can use it everywhere worldwide, and in Europe, we see a good improvement of the regulation with the MiCA, Markets in Crypto Assets Regulation, and travel rule, for example. And other countries hopefully will follow soon, like the US. It's very fractionized there. And I'm excited what will come there. Yeah. Did I miss something from your question?
Actually not. So to sum up, the first and almost foremost most important point is to have a clear regulatory framework in place, such that these kind of financial institutions can really rely on and trust the technology itself. So the regulatory framework is the basis for that. And then coming into play are companies like us, basically providing them the necessary infrastructure to deal with digital assets itself. And of course, then it comes into the use case application, as we just mentioned, the Electronic Securities Act being there for issuing securities as we're used to in a physical way back in the days, and in the future now, or actually lived at this moment here in Germany at least, represented as a digital token living on a blockchain and not anymore as a physical document, for example.
Right.
That's, I would say, a big innovation. and big step forward to digitalization itself or in general.
Absolutely, I 100% agree.
Good. If we take a look, I have these wonderful questions on my laptop here. Into the next questions. If we talk about blockchains in general, we or you and I know that there are non-public, permissioned or non-permissioned blockchains or protocols itself. Would you first of all like to maybe explain shortly what these kind of categories are? So permissioned and non-permissioned blockchain itself, public or non-public, which is basically permissioned or non-permissioned, and what kind of effects they have on financial markets or basically the intermediaries using them. Why would they use rather a permissioned blockchain or a non-permissioned blockchain? Whether you see maybe difficulties when it comes to privacy or speed, scalability.
Yeah, let me start from this point. As we already told, a blockchain is a distributed ledger. And that's the great thing about it, because there is no central entity who has the control over it. And for me, in my eyes, that's only my opinion, it makes not much sense to use a non-public permissioned blockchain, because then you can also use a traditional database. When we use, for example, in the financial industry, I would recommend a hybrid model. So you use a public blockchain, but with restrictions. So it's public permissioned, as you can say. And this combination gives a higher security. And I would recommend this, but every company has to look into their use cases by themselves and prove, do we really need a blockchain, or is a traditional database sufficient for us? There are flowcharts which you can use, and you can easily check if a blockchain makes sense for my company or not. So this is in essence about public and non-public.
What do you think about permission blockchains? A lot of people say, why should I build a blockchain where it's all about, as the definition suggests, the decentralized ledgers and multiple basically nodes participating in the network? Why should someone come up with a permission blockchain where the amount of involved parties is, as the name suggests, limited, permissioned, controlled? Is it still a blockchain? Can we call it a blockchain? Yeah, that's always a good a critique point in my point of view.
Yeah, that's open for discussion. And maybe if you need a high level of privacy, but want to use the decentralized blockchain,
so
why not?
Yeah, I mean, in my point of view, a permission blockchain is a simple data server infrastructure as we know it right now. I don't really see the point of it calling it a blockchain, to be honest, because you still remain control. It's limited entities participating in the network. So as a traditional server or network infrastructure is built nowadays as well. And maybe one more point out of my opinion is that most of these big conglomerates or banking projects taking place out there, there was Corda, for example. These are permission blockchains, and as you can still see, there has not been too much traction within these kind of projects. So let's see where the permission blockchain thing is going, actually, but I don't see any really big use cases as of now, to be honest, right now.
Yeah, that's true. Do we have some other questions? Maybe, we can sum it up. how can blockchain technology provide efficiency gains in financial services? Can you make a wrap up?
Sure. So talking about smart contracts again, we're definitely able to automate processes in a really, really easy way. Smart contracts are there to basically execute certain calls if needed in a permissioned and again immutable way. So I definitely see automation being a big point here. Of course, as we mentioned before, again, the reduction of intermediaries, a big factor, and in general, offering financial inclusion to most people around the world who probably do not have access to financial services yet. They definitely have the technology in hand. If they already, or if they use a smartphone already, they can go ahead and utilize this technology to basically gain financial services. They can start transacting with those low amounts of fees. So I definitely see gains within the financial industry that people are basically getting banked and included into the financial system. And for the existing markets, as we said, automation, reduction of intermediaries, reduction of fees. And there's definitely going to be more projects evolving as more banks are basically stepping, or more institutions are stepping into the field.
Well
would you
said.
would you like to maybe add challenges to that, or?
Yeah, as already said, the regulation and harmonization is one point, but also the standardization. So yeah, and there is also a lack of maybe data protection on some of the blockchains. And yeah, we need, of course, to adjust the regulation when it comes to KYC and AML, but also the reporting standards. And yeah, but I see here a good way from the regulators all over the world. And I'm positive for the future that this new technology will be established in many industries, not only the financial industry.
Absolutely. Maybe an outlook. What are we going to do the next years as a regulated custodian? Our aim is definitely to basically offer our regulated wallet infrastructure, regulated custody services as a market leader in Europe in general. MiCA being the underlying regulatory framework for us as well, opening us the door to basically interact in multiple different kind of jurisdictions in the European Union, beginning next or at the end of next year. So far, we're still focused heavily on the German market and the surrounding countries like Switzerland and Austria. But in Germany, we definitely are in a pole position and a market leader for providing the custodial services in digital assets for banks and financial institutions specifically. And maybe looking into the technology part or tech part of ours, we are definitely driving multiple kind of developments in regards to DeFi, staking, opportunities for our partners, not only basically that they're able to store their crypto and digital assets in a safe manner, but also start interacting with them, using them for different kind of use cases. And this is where we definitely see us in a position to come up with new solutions, new technology, and make it accessible as easy as possible.
Well said. Then thank you very much for doing the podcast with me. It was a lot of fun, and hope the audience learned something about blockchain and crypto custody.
Thank you very much.
Thank you for tuning in to this podcast episode of Tech Talk by GSDC. If this episode has intrigued you about blockchain, then do check out GSDC blockchain certifications. The links are provided on the caption below, and also do subscribe for more insightful conversations.